Hello and welcome to today's event on the international implications of central bank digital currencies, or CBDCs, organized by the Digital Euro Association. My name is Jonas Gross. I'm a co-founder and chairman of the Digital Euro Association, and I'm really thrilled to be joined today by amazing experts from the field of digital currency, namely John Frost, senior economist of the Bank for International Settlements.
Hello and welcome.
Ashley Landquist, a project lead and blockchain digital currency at the World Economic Forum. John Belisarius, Global Managing Director, Blockchain and Multi-Party System, Digital Assets, Custody and CBDC Lead at Accenture. And last but not least, Taiwan Shi, a Senior Research Fellow at the National University of Singapore. So first of all, thank you very much, of course, for the people, the audience for joining. And also thank you very much to you guys for joining the panel and having this discussion with us today. The event format will be as follows. We will start with a 20-minute keynote by John Frost, basically introducing the topic of international implications of CBDCs, or how CBDC can impact cross-border payments. And this presentation is based on two recent publications by the Bank for International Settlements. We will also put into the chat later on. And afterward, we will do a deep dive into this topic via the panel discussion with all the experts here. So John Frost, Ashley Landquist, John Belisarius, and Taiwan Shi. And last but not least, on our agenda, we will have a Q&A session. So if you do have any questions, we will definitely have 15 minutes for you to ask them. And how you can ask the question, I will just show in a second, because we use a specific tool. Right, so before we start with the content for today, I would just very briefly take the opportunity to present the Digital Euro Association to yourself. So this is the kind of think tank and association that is organizing this event today. So we are basically a think tank around digital money, if you want. So we basically focus on implications of central bank digital currencies, the topic of today, but also of stable coins, crypto assets, and some other forms of digital money, as, for example, commercial banks currently think about issuing commercial bank money on a DLT, for example. In particular, we focus on the digital euro, but this does not mean that we only focus on CBDCs. So the digital euro, the ECB, for example, discusses, but we also focus on the digital euro from a blockchain perspective. So this means we also focus on the private sector digital euro, if you want. This is basically, the digital euro in the form of stable coins, tokenized e-money, etc. So we basically both address this public and the private sector initiatives. And our mission is actually to contribute to the field and the political discourse through research, education, providing a platform, etc. And for us, it's really important to stay independent and to kind of shape the discussion on the future of money. We basically built the Digital Euro Association on three different pillars. The first one is education, then community, and last but not least, collaboration. So with education, this is, of course, also what we're doing today, because we're hosting events, we're hosting panel discussion, we are hosting keynotes. We will also introduce a podcast very, very soon. And besides that, we also plan to do research starting just in a few months, hopefully, to also address these topics from a more scientific and more detailed perspective. Besides education, we also want to build a community around all these digital money topics. So today we are really thrilled to consist of already approximately 200 experts in the field of digital money. So ranging from central bankers, legal experts, startups, technologists, consultancy experts, etc. And we are, of course, working to enlarge our community and also to build a network, a really big network around these digital aspects of money. Because for us, it's really important that, for example, we are the think tank people go to if they, for example, want to connect to people in this sphere, or, for example, if a company is looking for a legal expert in the CBDC space, for example, then we basically want to be here to provide such a context, right? And this is also one mission of the Digital Euro Association. And as a last pillar, we also foster collaborations. This, of course, comes from the community aspect, that we bring similar-minded people together that are really interested in shaping the future of money and also the future of the digital euro, and foster these collaborations both on a scientific perspective, but also hopefully in the future on a prototype perspective. So if this sounds interesting for you, we have, of course, also different possibilities to participate in our association. So for individuals, you can basically become a fellow or a DI expert. What this basically means is that you can apply to become normally a fellow, you don't have to have any pre-knowledge about it. So just if you want to be up to date about digital money, want to subscribe to our newsletter, and also want to be affiliated to the DEA, you can become the DEA fellow. And for a specific set of DEA fellows, we also have the possibility to become DEA experts. So this is basically the people that, kind of address these topics, I wouldn't say on a daily basis, but maybe on a weekly basis. So also do very, very detailed research or practice projects, etc. So this is how individuals can participate. And besides that, we also have for a few months that companies can join. So if you as a company want to be part of the DEA network, you can become an active member or a supporting member. For an active member, you would basically become part of this and would get access and would also receive voting rights, and later on also could be part of our working groups we will establish at the end of the year. And if you are a supporting member, you can basically fully exploit like the benefits and the services we offer when it comes to being affiliated with the DEA, also human resources and matchmaking, etc. So about panel discussions, events, etc. So if you're interested, you can, of course, reach out to us. We are there on LinkedIn, on Twitter, so social media presence, but you're also available, of course, to be reached via email. And we also have a website we just put in the chat. So if you would want to learn more about this association, just let us know. We also have a newsletter if you want to be up to date monthly about what's going on in the digital money sphere, then you can also just subscribe to this newsletter. Right, so this was it actually from an introduction perspective. Now I'm really happy to kick off this great event today. And maybe, just one last aspect before we kind of go into this event format. And this is basically how you can ask questions. And how this actually works is that we use a tool which is called Slido. So what you can do is that you can go to slido.com. I will just briefly share my screen again. So if you want to ask questions, go to slido.com. You can insert here the 6-digit code. And if you do this, then you are basically in the question room for today if you want. And from there, you can ask any kind of questions you have. So please feel free to use it, and please do not use the chat in YouTube, right? So please use all this Slido tool. We also inserted the information in the YouTube chat so that we have basically we have the data and the question collections centrally at Slido. And what you can also do, and we would kindly ask you to do so, is you can also upvote other questions, because in the end we have 15 minutes to answer questions, maybe a little bit more, and we will in the end answer the question that have received the most likes, right? So please also feel free to like the questions you would like us to answer, because in the Q&A we will later on start from the highly ranked questions then to the questions which are a little bit less liked from the audience, maybe not from us. Right, so that was actually it, the introduction. Now I'm really looking forward to this topic. And I mean, to kind of kick off this topic, we've seen that kind of every central bank looks into this topic. I mean, there is a great survey by the BIS indicating that almost 70% of the surveyed central banks kind of look into the CBDC sphere. And this really means there is a really high dynamic. But when we look into industrialized and advanced economies, we also see that central banks remain quite cautious and still kind of try to figure out the design, right? And one design dimension is basically what to do with CBDCs for cross-border payments. So should it be open for non-residents, for foreigners? Should it be restricted? Or should there be a wholesale CBDCs maybe for the interbank settlement that really works or can kind of improve the current system related to the settlement of payments in an international layer, right? And this is all questions and all promises CBDC can bring, but of course this also has risks, as probably kind of everything also related to CBDC. So I think this is a really interesting and highly relevant topic. I also think that this has not received as much attention as it actually should receive, but I'm very happy that actually, lots of the panelists today also researched it. So John Frost with the BIS with a recent paper, also Tajun with a paper they released, I think 1 or 2 years ago, and also John with Accenture and the Swiss report, and Ashley as well, right? So I'm really looking forward to this. I think we have a really good set of experts for that today. And now I would love to hand over to you, John, for us to please introduce the topic and present the paper you have basically previously published, because I think this is really a very good starting point to address the topic CBDCs from an international point of view. So the stage is yours, John. You're still muted.
There we are. Thank you very much, Jonas. Thanks for the invitation. I'm just going to check that the screen is visible.
Looks really good, thank you.
Wonderful. Yeah, so it's a pleasure to take part in this event. Thanks to Dea for the invitation. And as Jonas mentioned, I'm going to draw on joint research, actually 2 papers. One which is a stock take of work on central bank digital currencies around the world, which is joint work with Raphael Auer and Giulio Cornelli. And the second one, which is a newer piece and that addresses specifically the cross-border dimension of CBDCs, is joint work with Raphael Auer, Kodrutza Boar, Giulio Cornelli, Henry Holden, and Trace Verley. I'll state at the outset that these are my own views and not necessarily those of the BIS, and we're very happy to make available the links to these 2 papers, as well as some other work that we've done recently looking at CBDCs and their potential both in the domestic and the cross-border context. So to kick off, I'll just talk about the work on CBDCs. Jonas mentioned that central banks around the world are working on CBDC research and development, and I'll talk about that. There is a lot of heterogeneity in the CBDC projects around the world, but there are also some commonalities and some important commonalities in the design that I think are important to underscore. When we look at the cross-border use of CBDCs, this can be either in the retail or wholesale dimension. So a number of central banks have given thought already to how non-residents may use a CBDC domestically or abroad. And in the wholesale dimension, there's a lot of potential of so-called multi-CBDC arrangements. And there are broadly 3 models for these. I'll talk about these as well. Finally, I'll conclude, and I think that the meat of our discussion will then be in the panel discussion with the other panelists. So just to kick off, CBDCs are really an idea whose time has come. If you look at the last 5 years, there's been a debate on CBDCs for quite some time. There have been some central banks that have, done experimentation with digital currencies already, even before 2016. But the stance on the actual promise of CBDCs has changed notably. So in the period 2016, 2017, 2018, a number of central banks, were working on these issues, and central bank governors and board members made clear in speeches that there is active work and thinking on this, but especially in the retail dimension, when looking at retail CBDCs, there wasn't yet any plan to proceed any further than conceptual thinking, and there were a number of central banks that said, openly that they don't see a need or a use case in the short term. But in the course of 2019, 2020, and 2021, things have changed a bit. A number of central bank governors have made clear that they do see more of a use case for CBDCs. There have been consultations. There have been a number of announcements about actual proofs of concept, pilots in some cases, and now, as I'll show in just a minute, 2 live CBDCs in the world, retail CBDCs. And you can also see quite a bit of work in the wholesale dimension, and a number of announcements and speeches that really, make the case that wholesale CBDCs could contribute to the efficiency of payments and settlement, also in the cross-border context. So we've tabulated research and development projects on both retail and wholesale CBDCs, and that's displayed here, again with the cumulative net stance of speeches in black, just to show how this is developed along with the public communication on these issues. And you can see that especially the number of central banks who publicly communicated about retail research has increased quite a bit, but there are also retail pilots. And I mentioned the 2 cases, so the Central Bank of the Bahamas and the Eastern Caribbean Central Bank have now actually launched retail CBDCs that are in use in those 2 jurisdictions. If you look at this map, and I think that things like this will be familiar. Of course, the CBDC tracker by Jonas and others, and the Atlantic Council, a number of institutions have put out heat maps showing where in the world CBDCs are being researched and developed. This one is based on our own database, which is in each case based solely on official central bank sources. But you can see that there are quite a few central banks that have either retail work, so research in kind of the pink, or a pilot completed in red and a pilot ongoing in darker red, or they have wholesale work denoted here in blue. In a number of cases, central banks have both retail and wholesale work. So particularly in the Euro area, there's work both by the ECB and individual national central banks. Also in Canada, in South Africa, and Australia, there's research at least on both the wholesale and retail front. Now, each of these CBDCs for retail or wholesale use is being developed in the context of an individual jurisdiction with its own challenges, in starting conditions and policy goals. So there is quite a bit of heterogeneity in the approaches taken, but there are also a few key commonalities. So let me just briefly touch on those now. So looking at heterogeneity, there are a number of ways of classifying central bank digital currency projects, distinguishing between their characteristics. And one that we go into great depth about in the paper on the rise of the central bank digital currencies is the CBDC pyramid, which classifies 4 different attributes of CBDC projects. The first is architecture. This has to do with the relative role of the public and the private sector in a CBDC project. The second is infrastructure, whether it uses distributed ledger technology or conventional technological infrastructure. The third is access. This concerns whether it's based on anonymous payments, token-based access, or rather some form of identification, loosely considered account-based access. And finally, critically for this discussion today, is interlinkages. In particular, whether a CBDC is meant primarily for national or for international use. And you can see that across all of these dimensions, central banks are taking a range of approaches. On architecture, a growing number of central banks is considering a hybrid or intermediated architecture, where both the private and public sector play strong roles, where private sector payment service providers do retail-facing services, but the central bank operates the core of the system. On infrastructure, you can see a mix of conventional DLT and both conventional and DLT being used in both research and development. On access as well, there's central banks who are looking primarily at account-based, primarily token-based, or even both, and perhaps with tiering, whereby smaller transactions can be done with anonymous tokens, but larger transactions are account-based, also for AML-CFT issues. And in each case, there are a number of central banks that are undecided on these specific features and that are keeping their options open and considering all of the design options. But what's really striking relative to just 1 year ago when this paper was first put out, we're seeing a really big increase in the number of central banks that are thinking about the international dimension and international interlinkages for their CBDCs. And I'll talk more about that in just a minute. So this is the heterogeneity that we see in central bank digital currency research projects. A commonality is that in all the cases that we've surveyed, central banks are considering CBDCs as a complement to, not a substitute for cash. In the vast majority of the cases, central banks are considering designs in which the private sector also plays a key role, in particular in performing retail-facing payment services. And again, a commonality is that there's growing attention to the international dimension. While central banks are considering CBDCs often for domestic reasons and in line with domestic mandates, there's greater attention over time to their potential also to help in the cross-border dimension and to facilitate cross-border payments. So let me start with the cross-border use of retail CBDCs, and I'll be drawing for this primarily on the work on CBDCs beyond borders that surveys 50 central banks around the world with regard to their the cross-border use of their retail CBDCs or wholesale. Now, most central banks have not yet made a firm decision on the use of the potential future CBDC by non-residents within their jurisdiction or by non-residents outside their jurisdiction. So you can see that among the 50 central banks that we asked, in both cases, more than half are undecided about the use by foreign residents or the use in other jurisdictions. That's shown in the two panels here on the left. But what's notable is that there are a number of central banks, about a quarter of those we asked, who are considering use by foreign residents, for instance, tourists, business travelers coming to their jurisdiction. For instance, the People's Bank of China has discussed with regard to its eCNY project that it will be available for use by tourists and other non-residents in China, also in light of the 2022 Beijing Winter Olympics. And there are a number of central banks who say initially they may not have the CBDC open to non-residents, but they may potentially do so in the future. And we see a bit of a different pattern for use in other jurisdictions. So this is use by non-residents outside the jurisdiction of the issuing central bank. There, about a quarter say that they're not planning to do it initially, but they may do so later. And there are, again, quite a few that are undecided. You can see that there is a correlation between the two. Those central banks that are considering use by foreign residents are also more likely to envisage use outside their own jurisdiction. Now, the use of the CBDC outside the issuing central bank's jurisdiction, as well as the domestic use of foreign CBDCs, does raise a number of potential risks. So central banks are taking seriously the concerns about facilitation of tax avoidance, loss of oversight by domestic authorities, and other issues due to the use of a foreign CBDC in their jurisdiction. Some are also concerned about undesirable volatility in exchange rates. And there are a number of other concerns. So if you see this last column, other, this includes AML-CFT risks, cyber risk, ease of settlement, emergence of a foreign CBDC as a dominant vehicle in the domestic market, so-called digital dollarization, as well as imbalances of capital flows and a number of other concerns. And I think that one thing that's important to emphasize is these concerns are being taken very seriously, and they are an input into the discussion of design of central bank digital currencies. But there are technological capabilities to mitigate a number of the risks. In particular, tying a CBDC to some form of identification could be very powerful in reducing some of the risks of so-called digital dollarization. Having an account-based CBDC or at least some form of identification, also in a token-based system, might entail that both the issuing central bank and the central bank of the receiving jurisdiction would have oversight and control over this use. And this might be a very powerful means of mitigating some of the risks that central banks are concerned about. Again, there is a correlation. Those central banks that are concerned about, for instance, loss of oversight and FX volatility are also concerned about use of foreign CBDC domestically, etc. And these are active issues in the international discussions, also those taking place in international working groups hosted by the BIS. Now, an additional policy tool that some jurisdictions have access to is FX restrictions. So at least about a quarter of the jurisdictions, the central banks we asked, have access to restrictions on the use of foreign currency to address FX mismatches or to prevent dollarization. Most of those that we asked do not have access to those tools currently, but a number would reconsider if there would be widespread use of a foreign CBDC or indeed a foreign stablecoin. Let me get to multi-CBDC arrangements, and again, this is something that's more relevant in the wholesale dimension, but where a number of central banks see quite a bit of potential for new arrangements to facilitate cross-border payments. So there are broadly three models for multi-CBDC arrangements, and I'll just briefly sketch these before saying what central banks are actually considering in practice. A first model is relatively modest. This is an arrangement with just enhanced compatibility between different CBDC systems. So imagine in one country you have CBDC system A, It has, an interface for use by retail and household or by financial institution users, and it has a legal system that underpins it. And in another jurisdiction, you have CBDC System B that has its own arrangements. Now, the technical and regulatory standards underlying each system, of course, will depend on the characteristics of each jurisdiction, but there are possibilities to make them more compatible with one another. So you could think of coordinated messaging formats, ISO 20022. You could think of, different privately offered correspondent and clearing services being coordinated and having common technical standards that underpin them. So this requires some degree of regulatory coordination between the central banks, but it's relatively modest. And of course, the gains from this arrangement would be perhaps more modest than the ones I'll discuss next. A second model is an interlinking model for CBDCs. So imagine now that you have shared technical interfaces or the use of a centralized or decentralized common clearing mechanism. And an example for this is Project Jasper Ubin by the Bank of Canada and MAS. And I think we'll be able to hear perhaps more about this later on. This requires somewhat further reaching cooperation between the central banks to agree on these shared technical interfaces, but it also involves potentially greater efficiencies in cross-border payments, potentially lower costs, higher speed, and ultimately smoother cross-border payments than currently. And a third model is integration into a single MCBDC system. So multiple CBDCs can be run on a single platform, and the BIS Innovation Hub is considering a couple of examples, for instance, the so-called MCBDC Bridge or Project Dunbar. There would have to be mutually recognized ID schemes. So again, assuming that the CBDC is based on some form of identification, it would be important that central banks in the different jurisdictions at least recognize one another's ID schemes to make this work. There would also have to be a single rulebook and governance arrangements and a single infrastructure and ledger. So this is a fairly far-reaching form of cooperation between central banks, but would have potentially the greatest benefits in terms of efficiency. When we ask central banks about their plans, we can see that a number, of course, are not decided yet regarding MCBDC arrangements. They are looking into it, but many have not yet taken a firm decision. Among those who have, it's especially the second model, the interlinking CBDCs, that seems to be popular. And there are central banks that are considering models 1, enhanced compatibility, and model 3, integrating CBDCs as well. There's a range of approaches to interoperability, to MCBDCs, and to FX conversion. So a number are considering interoperable features to reduce frictions in cross-border and cross-currency settlement. A number are not decided. And there are some central banks that are actively considering a role of the central bank in the FX conversion process. And overall, just to make the concept clear, relative to today's system, which is primarily bank-based and relies on a correspondent banking network, where the payer makes a payment from their originating bank through a respondent bank, which goes to the FX market, pays into the correspondent bank, and then the receiving bank of the payee. An MCBDC system, MCBDC arrangement, could simplify the process dramatically. The payer interacts through a PSP with the CBDC system in their home jurisdiction. Of course, there still needs to be FX conversion, and there's still an FX market as before to take care of the mismatches in currency and the need to exchange them. But also on the receiving end, because the CBDC is a direct claim on the central bank, because there's instant settlement, things could be much faster, more efficient, and lower cost. And you can see that the route is much more direct in this system than in the current system with correspondent banks across borders. Now, again, the BIS Innovation Hub is working on a few different projects. I mentioned the MCBDC Bridge already. which brings together Hong Kong, the Hong Kong Monetary Authority, the Bank of Thailand, the People's Bank of China, and the Central Bank of the UAE. And that's the third model, the MCBDC, single MCBDC system, and that's currently underway. There are also projects such as Project Jura between the Swiss National Bank and the Banque de France, and Project Dunbar, which are looking explicitly at cross-border wholesale payments. Let me conclude. Again, central banks are ramping up their work on retail and wholesale CBDCs, and we see this in the stock takes of central bank work around the world. As mentioned, CBDCs, both in the wholesale and retail dimension, could ease frictions in cross-border payments relative to the current system. On retail CBDCs, central banks are tentatively inclined to allowing use by tourists and other non-residents domestically. They seem to be somewhat more cautious about use beyond borders. There are concerns about monetary implications, AML-CFT, a number of other issues, but these can be mitigated to some extent with an account-based design or reliance on some form of identification. At the wholesale level, 28% of surveyed central banks are considering MCBDC arrangements, models 1, 2, or 3, and about 14% are considering some role in FX conversion. And overall, there's clearly much work still to be done, but a very strong role for international coordination so that central banks can work jointly on the issues facing them all, and also work in collaboration with innovative players in the private sector to improve the overall system. So with that, I will hand the floor back to Jonas, and looking forward to the panel discussion.
Perfect. Yeah, thank you very much, John, for this really great keynote. I think this is indeed a very, very good starting point to start talking about these international implications. We have also in the YouTube chat posted the papers you wrote, and also what Tao Jun basically wrote almost more than 1 year ago about this topic. So if anybody's interested in the views, of course, besides the panel, you can read it here. And also thanks John for this paper in general, because I think what's really nice is to kind of to kind of lay out who we currently stand, right? So which different options exist for getting CBDCs connected, right? So to address it, and also to see, of course, what central banks consider, but we also see, I guess, that we are quite early in the race, right? So we see from your data also that lots of central banks are still undecided. And this is also, of course, motivating us to do more events as this today, because this aspect is clearly in its infancy, and it really has to be talked about this, about pros and cons a lot more. Right. So again, to maybe also introduce the others again. So with us, Ashley Landquist from the World Economic Forum, John Vallisarius from Accenture, and also Tajun Ji from the National University of Singapore. So maybe to kick this off, what John basically did in the keynote is also kind of explaining where CBDCs can help, right? Because I think this is like the first question to ask: where are the risks, where are the issues, and which issues can CBDCs basically address? And here, John, you laid basically down that there are kind of efficiency losses, I would say, right? So if you have lots of intermediaries, you have respondent banks, corresponding banks, etc., which make the current system, on average at least, kind of slow and also kind of expensive. And here maybe the question to all of the other panelists: what do you think? So do you think this is like the only and also the main reason, or do you think there are other issues that do exist in the current system, and that is CBDC from an MCBDC perspective, so getting different CBDCs connected, be addressed via a CBDC? So whoever wants to answer is very free to do so.
Yeah. So I'm happy to comment on that. I think that, very much, I think from a cross-border perspective, there's a tremendous amount of applications for CBDC, primarily because of the friction associated with cross-border payments, the correspondent network, the delay, the time, the counterparty risks that are there, costs as well, I think, and the FX component of it, I think, creates sort of an environment where multiple CBDC implementations can, I think, have a very positive impact on sort of any of the inefficiencies that are currently in this cross-border space. In the wholesale space, I think there's also a number of applications, and we see that, of course, with the rise of digital assets and the growth of the whole digital asset space. And I think you can have a digital security or a digital financial instrument, but you settle it through sort of traditional payment rails. And I think that having a digital CBDC to be able to do that reduces the counterparty risk associated there. And finally, I think on the retail side, there has been a lot of projects that are popping up everywhere. I think the case for retail is a bit more challenging, and I think it's very jurisdiction specific. It's very sensitive to sort of local considerations, of course. And I think there it's on a case-by-case basis, but I think definitely on the cross-border side, there's a tremendous amount of opportunity there to take inefficiencies out and compress and collapse a lot of the time and reduce the risk associated, the counterparty risk associated with these kind of transactions.
I could jump in with a follow-up as well. So building off of that, related to compliance and anti-money laundering, which is of course a major component of the cost of cross-border transactions. So in the multi-CBDC, maybe the number 3 arrangement, the integration into a single system, or in any of these others, how much do we think that we can collapse that component? And it almost seems quite intractable. Anyone?
Yeah, I mean, I comment on that. Yeah, I mean, I think. Sorry, go ahead. No, actually,
I guess just to round it off, it seems like we're talking. It doesn't seem possible to have immediate cross-border payment potential, given that.
Well, I think there are ways to address sort of interoperability, of course, functional interoperability, like the stuff that was done on the Jasper Ubin project, which we did. I think was a first sort of foray into the space to try to achieve that. But as sort of there are a number of approaches to look at that, and having one single system or one single CBDC platform may be too ambitious. It may be where it goes anyway, but it's difficult to see at this point. But I think, especially given the fact that there are a number of different initiatives that are happening sort of globally and progressing at different paces, at different rates, and so on, I think that's going to be the ultimate challenge of how do you coordinate that. How do you enable things like interoperability? Is there a set of standards? And I think that's where the role of the BIS and other parties, I think, will play a key role in trying to corral and bring a lot of those different initiatives together under one roof to make sure that they are ultimately interoperable and can work together. It's a difficult answer, I think, because we don't know yet how much of this will progress at what pace and who does what first. But doing it all under one umbrella, I think maybe a bit of a challenge, because there will be certain parties that will have already advanced on their own.
I guess, Tao-Jun, you also wanted to add something, right?
Yeah, so I'm coming from a more macro point of view. So one slide from John's, one of the John's slides was quite interesting. I mean, for 2019, almost very few central banks were interested in CBDC. It was only until after the pandemic, then a lot of central banks start talking about central bank digital currencies and so on. So I think one of the change in the pandemic is that the trade component stays there, and at the same time, the global e-commerce has become more and more prominent. So that involves a lot of small payments, small amount transactions. And with the old inefficiency, I mean, previously, the cross-border payments were mostly used for B2B transactions, which involve large amounts, and the corporates usually don't care about the transaction costs, and therefore there's a large margin for the legacy system to make profits from there. But now with the growing global e-commerce landscape, so these small transactions, they require small transaction fees. So definitely the legacy system was not going to work anymore. And I think that motivated a lot of central banks to start thinking about cross-border payments and also like interoperability of the payment system and so on. Yeah.
Yeah, thanks. I think lots of different reasons have been named why a CBDC can improve this. So maybe to summarize, I mean, of course, increasing efficiency when it comes to settlement of interbank payments. Also, what John said when it comes to the settlement of different assets. Also, what you said, Harjun, with a smaller type of payments. Maybe we also have heard a lot about these benefits, of course, by John. But maybe, of course, with every benefit, of course, kind of also comes a risk in the end, right? So here, maybe to also turn to this side, because of course also to get people active, it's of course, and I think it is really high potential and high benefits, but of course there is also the other side, right? So what would you think, what are the most severe risks you see with respect to using CBDCs for this cross-border dimensions? And here maybe starting with you, John Frost, since you were not involved in the last question.
So there's certainly a debate about CBDCs and about the potential of, I think, especially token-based CBDCs to be used in ways that might encourage money laundering or bring about digital dollarization. So by digital dollarization we mean the displacement of the domestic currency by a foreign CBDC in daily transactions or also in financial contracts. So this is a risk. This is something we have already in a number of jurisdictions around the world. There are dollarized and euroized economies where cash in many cases is used in daily transactions, where even mortgages and other financial contracts are denominated in a foreign unit of account. So this is certainly a risk that a number of central banks have talked about. And again, I think that this can largely be mitigated through the use of some form of identification that allows both the issuing central bank and the central bank in receiving jurisdictions to have some control over the transactions. There's another risk that gets talked about a lot, but I think is a bit of a red herring, and that's the risk that a CBDC could become a reserve currency, could challenge the dollar's status as a global reserve currency. I think there's a lot of discussion, particularly with regard to the ECNY, that it'll dethrone the dollar just by virtue of being digital. And I think that this does not seem very plausible. Indeed, the reason that currencies become global reserve currencies is because they have very deep capital markets behind them, because there's trust in the long-term value. There are a number of, because they're used in invoicing of international trade or assets. There are a number of economic factors behind reserve currency status, and it's relatively infrequent that the dominant reserve currency has changed. The last time was pound sterling in the 1930s. So I think that this issue gets talked about a lot in the context of CBDCs, and I think is probably a bit overblown or hyperbolic in some quarters.
Yeah, and to build off, I think the audience could take a mental framework of, okay, what are the unintended consequences to the issuing country, and what are the unintended consequences to the other country who has access to home country foreign CBDC accounts. And so we've been talking about many of those, like the risk of illicit activity that could be happening. If foreigners are able to use your account, then they're using your money for illicit activity. But it could also be the foreign country. The foreign country could be doing tax avoidance and doing shady things with your currency outside of its own jurisdiction. Of course, the digital identity could help to address that. And maybe you could imagine cooperation between countries on the order of how banking data cooperates as well around, or data sharing around that type of activity to reduce that risk as well. Both countries would be having currency fluctuations if there are heavy flows. So if foreign country is using home country's CBDC, the home country currency would appreciate at the cost of the foreign country as well. And the foreign country B, could experience capital flight as well, and loss of deposits in its commercial banks and investment products as that money goes to the other country that has the CBDC. which would have major repercussions in that country. But of course, and I think the BIS, the new annual report that John Frost was a co-author of, CBDCs, an opportunity for the monetary system, does a good job of talking about this. But really, both countries, either the home country or the foreign country, can not tolerate or not allow the other one to participate. So if the foreign country is, doesn't want these negative effects to happen, they could ban their citizens from accessing that other country's CBDC and vice versa.
Yeah, thanks, Ashley. And maybe let's coming back to one aspect, what Sean said, because I think what's really interesting is that the Chinese project, the project DCNY, is really very often be seen in this international context of kind of disrupting the role of the dollar, kind of, right? So, and you John, said that this is basically not, from your perspective, not indeed a severe threat, because this takes plenty of years and decades to emerge, right? So this is nothing which happens from today to tomorrow, because it also relies on values, maybe in political environments, etc. But what I'd be interested in your view, or the aspect is, because what I think when I thought about this question is basically, I mean, I guess there are also lots of countries that are, I would say, kind of indifferent in which currencies they do their transactions, right? I wouldn't say that it's most of them, but I think there are some of them. And if you now have, maybe assuming in China, a CBDC that, just assuming, potentially is open for these people, right, for the foreigners, and this is there maybe a few years before other industrialized countries, isn't this a situation that still the Chinese currency could gain? I mean, could of course not gain to become from one year to the next the most important currency, but still severely increasing in importance.
Yeah, so I think that again, I think that it's useful to have an inclusive dialogue on these things, and also to hear from the People's Bank of China what they say about their intentions, and they make clear that they will foresee the availability of the ECNY to foreign visitors to China. And they also have, broached the idea that the ECNY could be used in cross-border trade, in the Belt and Road Initiative, for instance, so in neighboring countries in East Asia and Central Asia. So certainly at the margin, having a digital version of a currency can be very convenient. Could mitigate some current frictions in payments for trade flows. Tao Jun mentioned cross-border e-commerce, which is a really interesting area that's really, I think going to be more important going forward. And certainly the ability to use, a CBDC in cross-border e-commerce could be relevant. And there could be, larger trade flows as well that could be denominated in renminbi and paid for in ECNY. But I think, again, it's very important to separate the issues. The reason that countries become, a widely used currency abroad, for trade invoicing, for instance, is because both parties, in a cross-border transaction, agree that this is the logical unit of account for their purposes. That they have trust in the long-term value, that it'll be, won't fluctuate too much relative to their domestic currency, that they have the ability to hedge, positions in the foreign currency relative to their domestic currency. And I think that, having a currency that's useful for invoicing trade, relies on not having capital controls, on having deep and liquid capital markets that are available for hedging purposes, for instance. And it's entirely possible. I mean, the Chinese authorities have been working to internationalize the renminbi, to develop capital markets. There's been less attention, I think, on liberalizing capital controls. But I'm not saying that it's impossible that the renminbi or the renminbi won't play a more important role going forward in trade invoicing. I'm just saying that it depends on a lot more factors than just the digital nature of the asset, of the currency. And I think that, again, it's a bit overblown to say that the ECNY in its own right will have a very large impact on this, or that it's a primary motivation. And again, I'll let the PBC speak for themselves on this, but they've made clear that there are a number of other motivations, particularly around domestic payment sufficiency, competition, etc., that are their primary motivation, and not an attempt to make the renminbi into a global reserve currency.
Yeah. Just to jump in there as well, I think one of the just an observation, I guess, as we start developing more and more central bank digital currencies around the world, we now have the opportunity, especially on the cross-border and the multiple CBDC perspective, to sort of perform these kind of sort of cross-border transactions in multiple currencies bilaterally between parties with an FX provider, of course, and so on, not necessarily triangulated through any type of reserve currencies. And I think our financial system as a whole has been architected in a certain way, and that sort of routes all these transactions through centralized systems. And I think it's big, multiple hub and spoke model sort of architectures and so on that we have. And I think what we can do with this new sort of innovation is sort of transact between parties. And I think that's a very interesting difference between sort of what a CBDC can do in the future and what we have available today. So not to challenge sort of the sort of the incumbents that are there and what's happening, I guess, in terms of reserve currencies and so on. But I think if you take a look at neighboring countries that do a lot of bilateral trade between each other, and because certain things are denominated in certain currencies, they have to buy dollars, or they have to buy euros, or they have to buy those currencies to settle those trades. And the time it takes for those transactions to actually complete as well. So procuring the currency, settling it, and transferring and so on, those settlement times, you need to factor those in. Now, if we compress and collapse all that, and are able to procure a currency that I can, if I'm selling some goods, I want to get paid in my local currency. And so somebody who's buying it from me and now can procure sort of a CBDC and settle that transaction towards me, then I think makes it a lot more efficient and a lot more expedient as well. So there are a lot of things to consider with regards to, I guess, global reserve currencies, the financial system, the way it's been architected, also the ability for us to transact in a different way, rather, bilaterally with parties, of course, still with FX in the middle of it, but with in a much more compressed and a much more maybe flattened sort of cycle. And I think that's what makes this very interesting.
Yeah, thanks for your insights there. Maybe one question to you, Tajun, and this is basically about what you did almost 1 year ago, is that you also wrote a paper, a more theoretical macroeconomic paper about these aspects. And we talked a lot about today about benefits and risk, right? And I would now be curious, I would ask you to share what basically the results of your research basically were, because what you did is you kind of modeled a world where such an international accessible CBDC exists. So I guess it would be interesting to see what basically your findings in this simulated environment actually have been, besides this prototyping, which is currently done, for example, by Accenture and also by the BIS.
Yeah, so yeah, thanks for mentioning our research. Okay, so it's quite interesting to find that in John's survey, a lot of central banks are actually keeping their doors closed at the moment. They don't want to circulate their currency in the other countries, but that's kind of it's reasonable, because at the beginning no one wants to take risk, and it's kind of a game. So each country needs to consider the other country's benefits and costs, so as to decide whether they want to do it or not. So in our research, we actually try to confine this digital currency within the boundary, and we find it to be beneficial actually to some of the emerging market, because this economy tries to stabilize the exchange rate, and at the same time they lose their monetary authority or monetary autonomy within the country if they want to go for free capital flow. So in this case, having a digital currency that's confined within the geographical boundary actually provides these economies who wishes to stabilize their exchange rate an additional instruments that can stimulate the domestic economy. So in a way, they have the government bonds which are internationally traded, and the exchange rate can be fixed via the policy interest rate. But at the same time, because the CBDC can never go out of the boundary, so they can use the quantity of the CBDC as a stimulus to encourage people to spend more if there is a low inflation, while remove the liquidity from the economy if there's a deflation in the economy. So in a sense, it is not a bad thing if the countries try to confine the circulation of CBDC within the country. Yeah, so that's our point of view. But of course, if you want to go for cross-border payment for the CBDC, some interoperability, some cooperation among the countries is necessary to avoid some of the exchange rate risk, and some countries may even face the risk of losing monetary policy independence. Like one of the papers by Uli and their co-authors, they talk about this when there's a global currency and countries tend to lose their autonomy on the monetary policy and so on.
Yeah, thank you very much. Because I think for these discussion on these international implications, of course, it's really good to analyze this also, like descriptively, also to do the prototypes, as I said, BIS Innovation Hub and Accenture is engaged at. But of course, I think it's also really interesting to have this research that really uses theoretical models, because I mean, we don't have CBDCs live yet, besides then these Bahamas and maybe the Eastern Caribbean as well, right? So yeah, I think this is really useful. This is also why I really like these two different perspectives here on this panel. So up to now, we did talk a lot about benefits, and we also talked about risk. We kind of talked about macroeconomic implications. And what I would now like to talk about is this aspect of interoperability, because John, in your presentation, you also mentioned that interoperability, I mean, really just a few central banks really say no to this, right? So it's still very open, and I think most also consider this. And I personally think that this is really important, to have a high degree of interoperability than these different CBDC systems can, if you want to talk to each other properly, right? So that you can really exploit this full efficiency potentials. And for me here, the question would actually now be more from a technological perspective. And now the question is here, how to enable interoperability, which is of course a really large question, and I know that lots of research is going on there. But maybe to start with the first direction, which technology would you say should be used? So is this something, because I mean, for the most projects in the wholesale speed, actually all of them, they are based on a DLT, right? For these kind of use cases. So here the question is, do you think that it should be the DLT that also reaches a high degree of interoperability if you use maybe the same DLT infrastructure or similar ones? Or do you say does nothing have to do with technology, or what would be your stances on this technology question? Thanks.
Yeah, thanks. So interoperability is very important, and to start off with, I think that very frequently it isn't primarily a technological question. Very often the reasons for a lack of interoperability relate to policy or to differences across jurisdictions that are not primarily technological. I mean, there are cases where there are different technical standards, and for this reason it can be very useful for central banks to coordinate early on. And to agree on technical standards. But one of the most severe shortcomings currently relates to the point that Ashley, I think, made earlier on. One of the reasons why cross-border payments are currently so inefficient, aside from these measures that I mentioned, the long chain of intermediaries, is the need for AML-CFT compliance, and the need to ensure on both ends of a transaction that PSPs know who's making the payment, who's receiving the payment, and to check this against to file suspicious transaction reports. All of the effort, in many cases manual effort, that goes into that currently. And so, one big area of interoperability, and one thing that we discussed in the annual economic report that's out last week, is the potential for mutually recognizing digital ID systems across borders. So this could be one very powerful way of supporting interoperability. This doesn't necessarily rely on any specific technology. What it relies on is that counterparties in different jurisdictions have a digital ID system, whether a public system, public-private system, whichever model is used, and that they can trust that the system on the other side is also able to ensure compliance. So again, I don't think that it's primarily a question of which technology is used. It's more a question of ensuring that there is this cross-border cooperation. I think it's primarily a policy issue, and ensuring that ID systems on both sides of a transaction are sufficiently high quality and are able to trust one another to ensure AML-CFT compliance.
Yeah, it seems at the World Economic Forum's work on CBDC right now, we're also laying out these issues, and we tried to think concretely about this as well. And it seems like the key value add of DLT could be basically, and I believe this was in the MCBDC report of BIS, to provide an alternative solution that for cases where basically the countries can't agree on or don't trust anyone else to run some single platform, but where you really get that benefit of a shared ledger that's like actually shared. No one else, there's no hierarchy of any other countries that have more power over the ledger than anyone else. You'll still have, as Don was saying, all of the policy, coordination, governance questions. They'll have to still set the same rules of governance, but at least this way, as one step, the ledger could be equally owned, right? Which might not be achievable without DLT, or equally controllable, perhaps. Maybe not. I'm questioning it myself.
Thanks. Yeah, I agree, and I think here DLT is really nice to kind of standardize in that sense, as you said, Ashley. If people don't trust or countries cannot agree on a set of rules, that here DLT can really provide like an environment where you don't have to trust any other parties in this sense, right? So,
but they'll still have to agree on the rules, right? They'll still have to agree on the set of rules. It's just that they'll have equal
rules,
to,
equal responsibility, if you want. Yeah, and maybe this also leads me to my next question. Again, to everybody. Let's just assume that in a futuristic world that lots of central banks already have issued a CBDC, like their own CBDC. Now the question is, okay, we want to basically provide them or open them for cross-border. So this was basically the model John basically illustrated about integrated different CBDCs into one meta CBDC layer or model, if you want. And the question I'm very often asking myself is, who should govern this layer? So should it be like a private sector entity? I mean, we have heard last year when we come back to this Libra Diem project that it was actually said that this is something like, for example, they could do like a stablecoin platform, right? But from my perspective, what I would say is, of course, also some international organizations like the BIS or the IMF could do this. But as I said, this is just my perspective. So I would be very, very interested what you think, who should do this, and who would be basically the trusted party or the national central banks would kind of trust to manage their CBDC FX maybe on the platform. Again, to everybody.
Maybe I'll let others answer first.
Yeah, I mean, I think that there's, depending on obviously there's a variety of different models for deployment, and it's obviously, it's a challenging question because we don't know how things will evolve and take shape, I think. But there are, of course, approaches that you could implement solutions where you have central banks working with commercial banks to issue wallets to individuals who can then use the CBDC to transact in their own geography, in their own jurisdiction. And then allow that same sort of wallet to be used by others as long as it's registered and as long as it complies with different sort of standards that have been set and so on. I think it's, without getting deep into the solutioning perspective of this, I think there are definitely approaches that could be taken to harmonize a lot of this. And I think the role of the central bank in defining sort of the standards and the policies and the standards is key. I think the role of the commercial banks in owning the relationship primarily with consumers at the end of the day, and their role in a two-tier model, I think is also very important. They have been doing and could easily continue to do, and of course should continue to do this going forward. And I think that's also going to play out, I think, in sort of local markets and so on. And I think all of that under one umbrella, different solutions and different technologies and approaches, but all of that in an interoperable under one umbrella of CBDCs that could be used by multiple consumers and users in multiple countries, still under under the sort of the guide of a central bank for its own consumers and its own currencies and so on, but also in a way that could be interoperable and could be used across different geographies as well. Could be the right approach, but then again, it's solutioning very early in the day.
But now, of course, also to John Frost, right? Because I brought the BIS into the game, right?
Sure. So I won't answer that very directly, but I will say this.
It's a shame.
So certainly, the infrastructure for cross-border payments, the underlying infrastructure, and to some extent the infrastructure for the payment system itself. I mean, there are elements of a public good in there, and so I think that having purely private provision of some of these core infrastructures could be problematic because the private sector may not always have the right incentives to ensure the public good nature of the system, to ensure, for instance, low cost payments for everyone, universal access, safety and soundness, integrity. So there are a number of central bank public goods that underpin the payment system, both in the domestic and the cross-border context. And I think another point that I'd make, is that payments very often, to function smoothly, to enhance efficiency, they need to be built on a foundation of trust. In the domestic context, again, there's a reason why central banks play a role and have a mandate for the efficiency of payment systems. Central banks, function as a trusted, institution at the center of payment systems. And in the cross-border context, central banks can make use of the fact that they have relationships with each other. Central banks have trust in other central banks, and often, these direct, relationships and networks of trust can be harnessed. And this is something that we're seeing in the projects of the hub that I mentioned. Central banks have relationships with one another across borders, can cooperate and agree on shared standards, for instance. And this can be a force that harmonizes standards and rules across countries, that allows for a shared foundation on which private sector innovators can operate. So there are open questions about how to, the exact governance of a system, but I think that we have international experience with, kind of cooperative oversight. We have international experience with, shared systems where public authorities work together to operate a system. And we're experimenting now with models and seeing this again in the BIS Innovation Hub projects, where central banks would work together and potentially even jointly operate infrastructures across borders, or harmonize their own CBDC systems in such a way that they are interoperable across borders.
Mm-hmm. Yeah, thank you for your insights there. And maybe as a last question before we come to the Q&A, because there are also lots of questions also to the audience. Please feel free to ask question. Also, like the questions, I've seen that you did this quite heavily, so please continue to do so. So what my question would be now, let's assume there is a central bank that wants to focus on these kind of international aspects of CBDC. So that basically that the central bank has the goal of increasing efficiency in cross-border payments, because from their country transactions are just very expensive, right? In this case, what would you think would be like the better focus to set? So should it basically focus on retail or on a wholesale CBDC? Because you also, John, laid out that of course you have these two different alternatives in the end, right? But in this use case, what would you say, again, to everybody, and what would you say which variant to choose or to try to play with if we want?
I think that wholesale is much more straightforward. I think in terms of implementation and sort of gaining sort of practical knowledge and experiences and so on. I think it's, you don't have to deal with complex things like consumers and consumer behaviors and all that kind of stuff. I think at the end, retail is a more complex undertaking for those reasons and others as well. And I think that in terms of, there are a lot of, so I'll call low-hanging fruit, but a lot of, valuable lessons to be learned and also implementations and things to gain from on a wholesale side as well. And it also depends, on what the challenges are in each, in your respective jurisdiction, right? So it's difficult to answer because there may be some things that are very specific where retail may make more sense. But, I think that with all of that sort of aside, I think, or that being sort of taken out of consideration, I think if you look at sort of wholesale versus retail, wholesale is more straightforward to implement the solutions around.
I actually take a slightly different. I mean, wholesale is of course it's easy to implement, but the more importantly, it should be for the retail CBDC to be implemented. That's what I'm thinking, because I'm thinking the future of cross-border trading will be actually driven by a few aspects. Number one will be the retail remittance. People working abroad, they want to send money home. So these constitute one of the major group of people who wants to use cross-border CBDC. And then the next will be the global e-commerce, where people selling and buying things online and they need to make small transactions. But then when you aggregate all the small amount transactions, it's going to be enormous. And then the number three will be the growing role of small and medium enterprises. When we see that a lot more small and medium enterprises start growing, and then they reach out to the international customers, and they need to have some kind of settlement methods. So this will require some cross-border CBDC, and I do think that these are where the retail CBDC is going to fly. And whereas for the wholesale CBDC, in the past, in the olden days, when companies doing the B2B transactions, those settlement methods are already there, and we just need to replace with the updated technology. So wholesale is easier, but then the more beneficial part will come from the retail CBDC.
I have a question for John Frost as well. I think I'm missing something related to the MCBDC arrangements, particularly Model 3, the integration into a single system. It was said a few times that that's mainly for wholesale. What's the main reason that it's not for retail? Is that just because of massive operational and cybersecurity complexity, or something else I'm missing?
The experimentation to date is in the wholesale space, and I think that as with any shared infrastructure, of course, the complexity does increase, and the point that John made is well taken. That complexity, of course, increases when you have retail participation. Then it becomes much more. There are much more issues around digital ID. And I think that the MCBDC bridge, which has been communicated about, is currently bringing together central banks from 4 central banks across Asia, and in the wholesale space. It is thinkable, of course, to do this in the retail space, but the projects are now focused on wholesale.
Yeah, great. So maybe to wrap this up this panel before we go to the Q&A. So I guess we have seen that there are lots of benefits and also potentials. These MCBDC arrangements can have, right? So both from a wholesale perspective, but also for a retail perspective. That it also seems that the central banks really seriously look into this aspect, but that most of them are still kind of undecided, right? So I hope, John, that you do this survey now again, also as your other survey, in a very regular manner, so that we see how it is maybe in 1 or in 2 years. So I guess there is still some decisions, of course, to be taken, which road to go. But of course, there are also risks when it comes to monetary policy, monetary sovereignty, also compliance, we mentioned, right? There are also limitations when it comes to interoperability, which technology to choose, right? Who manages the platform, etc. So I guess it's really good to kick off this topic, also to do lots of projects, as I mentioned, some of you are doing, and to see how this progresses. So what I would really like is to have this panel then again in maybe 1 year to see what has changed, right? Who has looked into this, whose progress has been made. So thank you for your insights in the panel. And what I would now do is basically, go to the Q&A session. I just share my screen again, because what we see here is this Slido tool I just mentioned. We have already 20 questions. So for everybody, if you want to ask a question, please go to slido.com. You see it on the left-hand side and insert this code, 831764. Alternatively, you can also scan the QR code and ask the question. Of course, what I didn't mention yet is I should have done this in the beginning, that if you want to have this question assigned to a specific person, you have to indicate this, of course. Maybe this was my fault, it's too late, but I'm still very confident that we basically get really good answers to the questions. And and I'm also, besides that, I'm very happy to introduce my excellent colleague Destan, who was also part of this project organizing team and make this event with possible, and was really driving this with great effort. And Destan is now also joining me for the moderation of the Q&A, and so we both will basically moderate this and ask the questions. Great. So maybe start with the first one. As I said, we are here quite democratically. So the ones with the most like appear on top, and we will basically go row by row if the questions seem appropriate. So the first one is, yeah, as I think most of them, not particularly on the international aspects of CBDC, but also on CBDCs in general. And here the question by Christoph is, what is, in your opinion, the advantage of CBDC? For example, in our case, the digital euro over current digital money, so bank money, is when the amount is limited, for example, 3,000 euros. So I think here the question is, what's the use case for a CBDC if you have a limited restrictions for payments or maybe for an account balance, what the ECB, at least what you hear, is currently at least considering. And here again, the question, since it's an indicational body, open to anybody. So whoever wants to answer, please feel free.
So I can give a response on this one. You know, as is discussed in the BIS annual economic report chapter that's out last week, CBDC is an opportunity for the monetary system. There are a number of you know, potential advantages offered by CBDCs, and I think they really have to be seen in light of, you know, the digitalization of the economy, the growing centrality of data, the issues that brings around competition, around data privacy, around integrity. So there are a lot of challenges in payment systems currently, you know, as they become more digitalized. And of course, you know, we're seeing the entry of new players into the payment system. We're seeing the greater role of big techs. We're seeing a lot of issues around, you know, data governance. And so really, you should compare CBDCs in the use case not to, you know, necessarily today's digital money, but to, you know, what will emerge tomorrow in the absence of this work. I think that what's clear from the question is, you know, a digital euro, or for that matter, any digital currency, you know, is being proposed primarily as a new means of payment, as a payment instrument that can be used for everyday transactions. This is also why there are the discussions of, you know, caps, and I know the ECB has communicated about this. So, you know, just like cash is used primarily for kind of day-to-day transactions, a CBDC may be designed in such a way that it's useful for you know, payments purposes, that it still has a limited footprint in the financial system. Nonetheless, it could, you know, increase privacy. It could enhance inclusion, so be a digital means of payment for people who are not banked or have limited access to banks or payment cards. It could ensure competition, you know, basically help to break through walled gardens or, you know, kind of closed ecosystems in digital payments. And it could, you know, be a means of ensuring that the public has access to public money, so a direct claim on the central bank, similar to cash and coins today. I hope that answers the question, and of course, very happy for others to give their thoughts as well.
Yeah, I mean, I would just comment, pile on top of that. I think there's a few sort of things to consider as well from CBDC for consumers, right? At the end of the day, there's a challenge, I think, there where we need to be very careful in how we explain this. I think for consumers as well, it's not a new payment scheme. It's a different format of money at the end of the day. So I think that needs to be sort of coming out as well as part of that sort of the whole debate, dialogue, and discussion with consumers and focus groups and things like that. I think that the danger is that we assume that most people will know what is central bank money versus what digital money is at the end of the day, and that is it's a big assumption. Most people won't even know the difference of that, and I think we need to take consumers along for the journey, and I think there will be some very clear cases where it'll become very obvious why this is preferred. The specific use cases and accessibility, you know, and I think is very important. Financial inclusion and various topics, and I think this is an enabler for a lot of those things that where there are gaps in today's access for consumers.
All right, so the next question is coming from Wilson Hagens. Wilson, I'm sorry if I'm reading your name incorrectly. So the question is asking the panel's view on the recent somewhat negative comments out of the US in regards to a digital dollar. So as you also know the news, there was a Fed's explanation about the skepticism for the digital dollar, especially looking at the the benefits maybe outweighing the risks, and whether the digital US is going to be adding towards the financial inclusion. So the question is open to anyone. Please take it.
I might not be aware of the specific context that was stated, but if it's in relation to Powell's remarks a while ago, I think so. Like all of these, like all the economies are evaluating a massive set of complex pros and cons of CBDC, and there's a lot of limitations and downsides and risks. A lot of them can be mitigated. We've been talking about these mitigations and the risks, but even if you take design and other conscientious steps to mitigate risks, you still have some cybersecurity risk that's just never going to be zero in terms of citizens' money getting hacked, citizens' data getting hacked, reputational risk of the central bank, and for central banks such as the Fed, massive burden on its shoulders in terms of continually operating successfully and smoothly with already a large complex system. So central banks like the Fed and in other major economies have to think very, very carefully about this. And it could be very well the case that the pros don't outweigh the benefits right now.
Thank you, Ashley. Perfect. Thank you for your answer here. And the next one now turns from the Fed again to the ECB. And here the question is, what is the panel's view, again, to everybody on the ECB's consideration to issue a CBDC in order to stimulate the demand for the euro for foreign investors? So I guess here it's referred to, I mean, the ECB lays out, I think, six different reasons to issue a digital euro. And I think one here was basically to increase the international role of the euro, I think it is put. So yeah, again, the question to everybody: what do you think about this this consideration about using a CBDC to increase demand for foreigners on the euro?
If you have a digital euro, there's a utility factor associated with that as well. So I think then there are many countries as well that use the euro as a currency, and if it's digital and there's a utility dimension to it, because you can use it to make digital payments remotely or what have you. I mean, I'm speculating, of course, how it would be used, but if there is a utility factor behind it, then I think it would make it very interesting for retail, wholesale use, commercial use, and so on. And I think if that is an objective, then I think enabling it, I think can create that kind of attraction and pull towards the usage of the digital euro.
Thank you so much. So the next question is a bit hard one, I guess. So is there currently a specific multi-CBDC model that the ECB is considering? So maybe we can, okay, now the questions, the order has changed, but I already asked the question. So maybe we can handle this question as what could be the specific things that maybe the ECB should consider when joining into a multi-CBDC model? Or if you're aware of a currently specific multi-CBDC model, please feel free to take the question.
It's a shame that we don't have an ECB representative on the panel that can give a view on this. But
yeah,
I think
next time, hopefully.
appropriate to let the ECB speak for itself on that.
Yeah, this is also fine. Then we are not speculating. And next,
I guess to briefly answer, I'm not aware of any publicly stated multi-CBDC platform.
Yeah, I haven't heard anything like that either.
Great, thanks for your answers here. Yeah, and here the question is, I think we can answer this quite easily. It's the international use of the link to a DLT. I think we discussed this already, right? So that we said it can be a DLT that makes things easier if parties cannot really agree on a specific design, right? And want to rely on like this joint protocol then. But I think we also discussed this. Yes, okay. So Yeah, I think it makes sense to use the second question here. I think we should not talk about El Salvador and Bitcoin, because this is really off topic, even if this is interesting. But if somebody of you wants to comment, please feel free, but do this for answering the second question. So yeah, how do you evaluate the interplay between CBDC and privately issued stablecoins? So here again, I guess about the use cases. So in the future, do we need a CBDC and stablecoins? Is there like just one out of the two out there? Will it coexist, and what are the use cases?
I think stablecoins will continue to emerge, and I think they will play. It's either or. Initially, I think when we started looking at this, we felt that it was going to be, CBDCs would eliminate stable coins, but in reality, I think that they have a role to play, and they also solve different types of problems as well. And I think if you have a stable coin issued by a large financial institution that is a global financial institution, and it tokenizes or it puts a stable coin in that represents its balance sheet, I think it has a different remit and a different scope than a CBDC issued by one nation state or one country. So I think there is it's almost like a tapestry of different types of currencies, and a stable coin could play part of that. And I think I wouldn't discount it. I think it's going to continue for a while, and I think it may even, with the advent of new technology and new innovation, they may just create new formats of money as well, and it will be stable coins. I think they will continue to exist.
All right, so the next question is, who will pay the exchange fees, and how will they be paid? Or will there be an international CBDC? And I think this question is kind of asking how it's the clearing houses, is there going to be maybe the international CBDC or MCBDC projects, and how is going to be the exchange fees shared?
Anybody wants to answer that?
Yeah, I mean, I think this is a market play, right? At the end of the day, it's also finding a party on the other side that's willing to convert your currency for theirs, right? At the end. So the challenge will be, how do you make that market very efficient to find those participants? Today, sort of, you go to an institution that will give you the best rate. Sometimes yes, sometimes no. But I think in this model, you will need to have a marketplace where, if I want to exchange my CBDC for another CBDC, I'll need to find the best price for it, and I'll need to find out. I have to have access to a marketplace in order to do that. So the role of a marketplace, I think, is still very much there. Now, in terms of the fees that are associated with it, are they a matchmaker and they basically take a cut of that? Are they in the middle of that transaction, or do we just find each other? For instance, I want to exchange, pounds for euro, and I find Jonas online or something and exchange it. But that there needs to be a marketplace for that in order for that to happen. So, I think the role of the marketplace will need to be there. How it will play out with regards to fees and so on, I think it still remains to be determined.
Yeah, thanks, John, for your answer there. And yeah, maybe as a last question, because time is already up. So yeah, let's take the next one. Could there be a multinational CBDC corridor with a clearing mechanism by creating a dedicated clearing institution? So as I understand it, that basically there is one party that is clearing the settlements, and these different CBDCs like connect to. I think, yeah, John, this kind of it seems to be have in mind like one of your proposals you basically laid out, right? I guess if I understand the question correct, but yeah.
Yeah, so I think that the options are still open at this point. I mean, central banks are cooperating on the issues and are looking at, which institutional structures will best support cross-border payments. And the central banking community certainly has experience with setting up institutions in the past that support international clearing. And I think, in the digital age, it'll be important again to consider the institutions that can best support this. I think that, as I mentioned before, there is a lot of work, policy work, and active technological experimentation through the BIS Innovation Hub. At this point, there are a number of options on the table to see which ones will ultimately be most promising in supporting the policy goals that the G20 and national governments have set in the payment system.
Mm-hmm. Yeah, perfect. So then actually the time is kind of up. So I really loved the discussion. So thank you all for being here today to discuss with us, to share your insight, because we have very diverse views on the panels, right? So more from practice, more from research, technology, international organizations, etc. So thank you very, very much for being with us today. We also had the question YouTube if we are allowed to share the slides, and Sean basically agreed that we can share the slides. So whoever wants the slides, please feel free to reach out to my colleague Daniel. We have the email address on YouTube, and he will forward the slides to you then the next days. With this, so thanks of course for the panelists being here, taking the time, 1.5 hours, so I really appreciate it. Also thanks to the whole DEA team, so for example for Destan, to Daniel, and also Valentin, who really and the others really support with this event. It was really a team effort, so thank you very much. And also for the audience, of course, to join, so also to stay until the end, we highly appreciate it. And yeah, you will definitely see new events and other event formats by the DEA. So I said we will host a podcast very soon, so if you're interested in that, just follow our social media channels. We will post it there, of course. And we will also have a next event at the end of July about stable coins. So here about kind of what's the use case of stable coins? Is there a role for the euro stable coins? Because currently it seems that this kind of lacks if you look at the market capitalization, right? So as I said in the introduction with the DEA, we both want to consider CBDCs, but also consider like really DLT-based euro-denominated means of payments if you want. So also stable coins, etc. So try to balance this one. So if you're interested in that, as I said, just connect to us, feel free to reach out, and thanks for joining. And I wish everybody really a great evening. And thank you very, very much for joining. It was my pleasure.
Thank you, Jonas. Thank you, everyone.
Thank you.
Bye-bye. Thank you.
Bye-bye.
Thank you.